Hello and welcome to PQ Prime. You're watching this special, and we have a company, JTL Industries, which is listing on the National Stock Exchange. The company is already listed on the Bombay Stock Exchange, and the company is it's a leading producer of electric resistant pipe, and it has a total top line of more than 1,500 odd crores for the year ending uh, FY23. And joining me is Dhruv Singla, who is the ED and CFO. Dhruv, thank you very much for joining us on BQ Prime. Uh, can you take us through the business model of your company and what kind of segmentation it has?
So yes, a very good morning to you. So our business model is in the production of ERW steel pipes, which are basically used for all the structural purposes, water and gas purposes, transportation, water and gas, low pressure gases, in the scaffolding. So everywhere around you see there is a pipe structure being used somewhere in some fashion or the other, be it lighting poles, etc. So our business model is firstly to produce ERW black steel pipes and then value add them by galvanizing it further to increase the life of the product. So we are one of the leading manufacturers in this segment, and we are also in the scope of manufacturing solar module structures for the solar initiative that has been going on into the Indian sector.
What kind of capacity you have there, and if you can give us an idea of how this segment is growing.
Yes. So currently we have 4 plants located pan India. 2 are in Punjab, one is in Maharashtra, Mangaon, and one is in Raipur, Chhattisgarh. And currently we have a capacity of 6 lakh tons, and going forward by the end of 2025 we'll be increasing it to 1 million tons per annum. And the current capacity is spread across all the 4 plants in a equal fashion, so to say. And with coming forward of the green buildings and everything, we are also venturing into the capacities enhancement of DFT technology, wherein we will be able to make column pipes, etc., and large diameter pipes by the way of it. So that's about the capacity and the market.
You spoke about the fact that you're going to increase your capacity to 1 million tons by 25. What kind of investments or capex you're looking at it?
So currently, the capex for the same would be somewhere around 350 CR, spread across a time frame of 2.5 to 3 years. And for that, in which 2 lakh tons is going to come by the way of DSC structures, and 2 lakh tons by the way of the manufacturing of traditional pipes, ERW pipes that we currently do.
And how do you going to fund this capex?
So we have recently raised a preferential allotment of 384 crores as well, which will help us to boost this growth perspective. And we are very well funded with our internal accruals as well. Our last year PAT was around 90 crores.
384 crores completely into capex, or it's because my understanding is that you're also merging with one of the companies, right? In the current fiscal.
Out of the 380 crores, about 240 crores is going to directly go into the capex, and the rest will be for the working capital and the balance working capital requirements for the company. And we will also be, as I said, we have a good bottom line that will also help us in increasing the capacity in the same time frame. Yes, the merging company is what JTL Limited already has been merged. There is no value transaction for that. It has been a share swap transaction since the promoter group was the same. And so there is no outright payment for that merger.
Okay, and what kind of capacity does that bring in, or what kind of revenue that company brings in?
So the top line that company brings is close to 400 CR last year. It was close to 400 CR, and the capacity of the same is 1 lakh metric tons for ERW pipes and about 1.7 lakh metric tons. We are one step backward integrated in that plant. So, by the way of re-rolling baby coils from the re-rolling of billets. So, that capacity in that particular plant is about 1.7 lakh tons per annum. So there we will be adding another 1 lakh tons in this year and another 1 lakh tons in the coming year to make the entire capacity to 3 lakh tons for ERW pipe manufacture.
Hmm. Um, so how does your uh, uh, cash flows improve with this merger? In the sense, what kind of synergies you bring in, and how much of synergies will this merger have with you?
So we are into the merger is with a company which is into the same line of production of ERW pipes. So
Okay.
the synergies that bring in is a wider market that we cater to already. We have a wider dealer network with the same name, same brand. We don't have to go into multiple branding of the same product under different names. Earlier, we had different companies for the purpose of taking advantage of MSME structures, but recently MSMEs have been categorized on the basis of their turnover and not on the basis of capital invested into. So we have gathered all together all the plants and got them merged into a single entity so that we have a bigger structure for a bigger market presence. There also, as I said, we are one step backward integrated. That is one of the only plants of ours that is one step backward integrated, wherein the synergies of in-time production of material that is required to cater to the diverse market takes place at a better timeline.
Hmm. Give me a sense of your export market potential, because I think if I'm not wrong, 16% of your revenues come from exports. How do you plan to take it up?
So by the current SKUs that we produce, we have a share of about 16% in the export market, in which majorly our Mangaon plant is a EU oriented export oriented plant. So by the way of that, we're able to up our production to the export market, so to say. Going forward with the advent of the newer SKUs, we intend to take this percentage close to 20 to 22%, so that we are able to cater to a wider range of market. Currently, our markets that we cater to are the European region, African region, Australian region, the Gulf region, but we are not able to cater to the American and the Canadian region currently due to certain restrictions on our product range. When we move into the higher dia, higher thickness products, where due to restrictions are lifted, so we will be able to cater to that market, which will increase our percentage of sales into the export market a little further.
Mm-hmm.
And also to say that we've been fairly new into the Maharashtra region. Our plant only started in 2019, and since then we've been gearing up the production and giving in-time deliveries to our customers. So when the market is right, we are able to serve our customer better, and we are growing slowly and steadily to increase that market share in the export as well.
Mm-hmm. Give me a sense of the EBITDA margin, because I saw EBITDA margins growing from FY22 to FY23. How does it go up from here, and what could be the triggers for you?
So the current blended EBITDA margin that we are able to achieve is around 5,300 rupees per metric ton across all our products. So this is on the basis of around 35% to 40% of value-added product portfolio that we are able to produce. Going forward, our capacity enhancement mindset is to increase the capacity to 1 million tons, as I said. Along with that 1 lakh increase to 1 lakh tons is going to be in the commercial black pipe segment by the way of 2 lakh tons, and DFT value added products by the way of 2 lakh tons. So we are increasing our kitty of products in a manner so that we reach the value added products, so to say 45% to 50% of our entire produce. So to achieve the same margins that we are already achieving, and probably increase them when the market is right and favorable. So going forward, keeping the ratio same for the value-added products, we should able to achieve the current margins that we are able to, we have already performed at.
How is your margin linked to uh, you know the raw material cycle? Because steel pipes, there has been some softness in the prices. So how does it link to yours? Because that would impact you as well. Because you are in a market where 55% of the market is by unorganized players. So the domestic market is very fragmented for you.
Yes. So we still cater to 85% of the domestic market, or 85% of our produce goes to into the domestic market. Uh, how we safeguard ourselves and our customers in the event of price fluctuation is that uh, we have the capacity to decrease the inventories when the price is decreasing and increase the inventories when the price is increasing. So, so that we are able to have a better raw material inventory cycle to cater to our customers and also to take into market fluctuations. Having been said that, most of our orders are already booked and are on a fixed price basis. So around 65 to 70% of our orders are back-to-back orders, which are on a fixed price basis. And when delivered timely, we are able to pass on the increase or decrease of the market to our end customer. Uh, our inventory cycle is only about 15 to 20 days. So whatever material is left unsold in stock, that is the only material at which we gain or lose in market fluctuations.
Hmm. But your inventory days have also gone up, right? And your debtor days have also gone up from FY 22 to 23. Is there a plan to have a normalized? What would be the normalized inventory or debtors day for you?
So our inventory days have particularly gone up because last year we were able to import cheap coils from abroad. So when we are able to import cheaper coils from abroad, we have to order in bigger quantities. So that is why the inventory days have gone up a little in the last year. Normal inventory days is about 15 to 20 days for the entire range. And having the reason behind debtor days is that in the last quarter of last year we had supplied certain material to the Jal Jeevan mission of the government. So majority of our dispatches happened in the last month. That is why certain debtor days have been increased.
Hmm. Uh, my understanding is that if you're supplying to Jal Jeevan Mission, what is the kind of turnaround that you get your revenues back, and are the margins as per your average margins, or is it lower?
The margins are as per the average margin because we are supplying value-added products to them. The commercial black pipes do not go. So it is for portable water transportation. So all the value-added products go into that. And we have one of the major we have been one of the major suppliers to the government for Jal Jeevan Mission. Uh, the turnaround time for payment, so to say, is around 45 to 60 days from the government side.
And what percentage of your revenues is currently coming from Jal Jeevan Mission?
About 15 to 20%.
And do you have an order book going into next 1 or 2 years?
No, it's a yearly tender with the Jal Jeevan Mission. So yes, we do file for that yearly tender, and according to the last budget, there were about 50 lakh or crores that were subjected to the Jal Jeevan Mission, and so yes, we see a good order in the current year as well from the Jal Jeevan Mission.
Do you have a current order book? How big is your current order book?
So we generally we have a order book of around 2.5 to 3 months.
Okay. Dhruv, it was a pleasure talking to you today on BQ Prime. Thank you very much, and congratulations on your listing on the National Stock Exchange.
Take care.